Welcome everybody to the Accessing Farmland in Western Washington workshop. This is actually the second one that NABC organizes. We had one last year in person, and so this one is virtual. We have four presenters for you today. And well, the idea of the workshop came, looking, NABC does more, business support and to farmers and producers in Western Washington. Um, but working with individuals and some groups, we realized that for some of them really, who want to farm, who have the skills or, even sometimes, resources, access to land is really an issue. And so, although for us at the ABC, our technical support is more for people who are farming already or producing ag products, we saw the necessity to address this issue of land access. In particular, we see that for um, a population that doesn't have that historic, access to land. So if you are connected to the farming community, or you have a parent that has a farm, it's more accessible than if you're an immigrant coming and just not having those connections or the knowingness about the different programs out there. Talk about USDA or Farmland Trust, and access to credit. So we put together this team of presenters for you. We will have Darcy Maldonado from USDA Farm Service Agency. So we will talk about the USDA programs for access to farmland. And then we will have Jess Sarsfield from AgWest. He's a loan officer. So talking about how to access their loan, and also how to, in general, how to structure credit for access to farmland. And then we will have Addie Candib from the American Farmland Trust. Addie is the regional director, and we'll talk about alternative programs that are out there for access to farmland. And then we'll have Alex Machado from the Washington Farmland Trust. Alex is the Farmer Collectives Manager. And so another way also to help farmers and groups of people who try to access farmland in Western Washington. So I think I will just give it to you, Darcy, at this point. And I'll let you introduce yourself a little more than I. Thank you.
Thanks, Maxine. I'm Darcy Maldonado with the Farm Service Agency. Basically, I've been with the agency in different capacities for the last almost 30 years. Right now, I'm the manager of basically the west side of the state, where I handle the offices in Everson, Washington, and in Chehalis. So I have a team that helps me process loans there. And that's kind of what I do. So Okay, and Emily's showing my screen. So basically Farm Service Agency, we're here. If you were going to advance the next screen. Basically, we provide loans. So we provide direct loans. So we work directly with you. And we do the guaranteed program where we're working with the lenders. We also help with business planning and submitting applications and answering a lot of questions. Why? Basically, we're promoting agriculture and building and helping that family farms basically become sustainable. You can go to the next slide, Emily. Oh, like I said, I service in Everson and Chehalis, but we have 8 teams in the state of Washington that we all help each other in processing loans. So we service the whole state. And basically our program, if you move to another state, we have loan officers there too. So I'm going to talk about the direct loans. So this is where we're basically working with our offices. So if you want to hit the next slide. So direct loans, they're eligible farmers, ranchers obtaining a loan directly from the government. We do have favorable rates and terms. We do not compete with the lenders, so we do have a little better interest rate. Loans are maintained. We service and maintain our own loans. And you can advance. Who's eligible? So we work with beginning farmers, experienced farmers, young, old, big, small. We kind of work with everybody. We can help ask some individual questions if you have some quirky things, which everybody has quirky things, and that's okay. We do help to deal with those. So if you want to hit the next slide. Currently, we have 803 customers in the state of Washington. Our portfolio basically is 176 million outstanding, and 577 of those 800 customers are beginning farmers. So we classify a beginning farmer as anybody that hasn't been farming for more than 10 years. We can advance. So our direct loans is basically when you're working with our office. We offer operating loans, farm ownership loans, microloan, and emergency loans. And you can advance. So the operating loans are for crop inputs, so seed, fertilizer, labor to help get that crop in. We can do family living expenses. We can do machinery purchases, livestock purchases, environmental programs, and debt financing on operating debt. Our current interest rate for those loans is 5.125. That does change monthly. And when your loan is approved, it is a fixed rate for that term. We can, for annual operating expenses and family living expenses, those are a 1-year term. And for machinery, livestock purchases, those are a 7-year term. Our maximum loan amount is $400,000. And we do want you to have at least a year's production cycle for that program. And we can do youth loans, and youth loans are youth that are involved in 4-H or FFA. We can help supplement their project for the year of up to $5,000. Our farm ownership program, we have regular loans, participation loans, and down payment loans. We do want you to have at least 3 years farming experience for our farm ownership programs. So we want you to be successful and know what you're doing and have a market, and we know that you can provide for yourself. Farming's hard, guys. It's not an easy process. Regular programs, so we can finance up to 100%. Our current interest rate is 5.375. We can go up to 40 years. Our maximum rate is at 600,000. And we can do a second lien on the property being purchased. So if you have another person coming in involved, we can be a second on that. We cannot refinance real estate debts. That's the only thing we can't do with real estate. The participation loan, this is where we're working with other people. So we're providing 50% of that financing. We're going to be working with, we can work with AgWest, we can work with a bank, we can work with a seller for a contract, we can work with an individual party to do the other financing. So our interest rate is reduced on that. So it's a 3.375 interest rate. We can still go up to that 40-year term. Our maximum loan is still the 600,000, and we can have a second lien on that. And these are really helpful if you're over that loan limit of 600,000. We could do a 50-50 on an 800,000 on that. The other program we offer is the down payment program, where you're providing 5% of that down payment. We're financing 45% of that purchase price of a maximum up to $300,150. And the balance of the remaining comes from a bank or another source. Our interest rate is 1.5%. Our term is 20 years, and the lender has to give you a 30-year term on that. And that's only for purchasing only. And living in advance. Here's kind of an example of the down payment loan, and it may be a little outdated, maybe in some parts of the state. Purchasing 80 acres for $400,000. The minimum down payment is the 5% of the 400,000 is 20,000. We're going to finance 45% of that 400,000 up to 180. And then the bank is going to provide a loan for 200,000. Our payments would be 10,500 for the 20-year for 1.5% interest. The lender's payment, 13,000 for a 30-year at 5%. A little outdated. It's probably more like 7 or 9, somewhere in there, for a total annual payment of 23,500. If the financing from the 50% lender comes from a federally insured lender, we can do a guaranteed loan program, and they can guarantee that amount up to 95%. On that, and there's no fee for the lender at that point, or the producer for that point, for the lender to turn in. We have another thing, if your microloans it's kind of our newest thing that we have. It's a simpler application. It's more flexibility. You don't have to have a year's production cycle. With farm ownership, you still have to have that 3 years history, but it's more for people that are wanting to start out, get involved, and start doing a farm. So microloans, we can do both operating and ownership. With ownership, should have that 3 years experience. With operating, if you've never operated a farm before, you can have a mentor for that first year to give you that experience for record keeping, production questions, things like that. We can do 50,000 for each loan. And the rates and terms are the same as our normal operating loans and ownership loans. We have an emergency loan out there as well. If there's a declared disaster, I know we've had some declared disasters for some drought conditions from last year. We can cover physical losses, and we can do production losses of 30% for operating expenses, family living, and refinancing debt. Interest rates is 5.375. Repayment, depending on what we're doing, if we're doing annual operating things or if we're doing production or physical losses, we can go up to 40 years. And the loan limit is 500,000. Okay, the next program that we have available is a guaranteed loan program. And basically, this is financed through other banks. So basically, you're not our customer, the banks are our customer. So like AgWest, different lenders in your areas, we may have a guarantee where we're basically covering not up to 95% of a loss if that happens for the bank. And we can do annual or farm operating loans and farm ownership loans. On there. Currently, we have 282 customers with 76.2 million outstanding, and 112 of those are beginning farmers. We can go on. The guaranteed loan benefits is basically you are working with the bank. We can go up to a higher loan amount. We can go up to 2,236,000. It's increased flexibility for the lender, and they determine the loan limits, the rates, and the terms. They can also sell their loans to a secondary market, and it's basically increased flexibility on the purpose of loan funds. So basically, where we can't refinance real estate debt, the banks can refinance real estate, and then we can guarantee that up to 95%. And then that's my short presentation. You can look at our website. It's fsausda.gov. Farmers.gov is where we have a lot of our information. There is a loan tool on there that you can go through, and you can kind of go through if you have any questions. You can ask specific questions, and it has an online application right now for individuals. We don't have the entity set up yet, but you can apply online. So, and if you have any contact, if you need more contacts, there's more information that you can contact our offices with as well. I don't know if you're opening it up for questions now or later, or how you want to do that, Maxine.
Thank you, Darcy. Yes, that's something I forgot to mention. Yes, we can open it to questions now, and you can put your questions in the chat. I believe everybody has access to the chat, or you can unmute yourself or raise your hand. However you'd like to ask your question. Yes, now is the time to ask questions to Darcy about the FSA programs.
I know you'll all call me after the report, I know.
So there's a question from Addie. Can you speak a bit more to the 3-year operating requirements you mentioned? I've been farming for less than 2 years at other farm operations. Does that experience count towards that requirement?
Okay, so we can use your experience. We want you to have some management experience when you're doing that farm worker and just not a basic laborer. So we can substitute that 3 years for education. We can do it for if you've had previous management experience, if you run a business. If you've worked on a farm, we can look at more of a manager position. We can substitute those years for that. So did you have any more questions with that, or
Is that good, or I see Diane, you have your hand up.
Yeah, so one of the challenges that our area possesses is that we don't have traditional ag lenders, right? I mean, if somebody's going for an FSA loan, that's great, but if you have to be paired with a conventional lender for the balance, do you have the ability to help people find that conventional ag lender? Because most of our folks, they're like, well, it's a real estate loan. You have to have like a regular real estate loan, right? And they aren't experienced in lending on farmland.
Right. We have a list of egg banks and different lenders that we do the guaranteed program with, and that we can give you a list of lenders that'll work. And most of our lenders work all over the state, actually. So we can give you some of that.
Okay. So, and as a follow-up, one of the challenges with USDA and FSA types of programs is that it tends to be a slightly longer timeline than perhaps maybe a standard, we're going to buy a house, we get pre-qualified. Do you have any thoughts on how, is there things that people can do if they're looking for land and they can come talk to you and sort of get pre-qualified, or do they have to have the land identified? What does that look like?
So unfortunately, we are a long process. I tell people if we're doing the direct financing, it's a 4 to 6 month process before we can close that loan. The other thing is, if you're looking at, if it's over the 600,000, you need to talk to that lender first and get them on board with it. If you want to do the participation loan, talk to that lender and see if they'll work with you. That's important on any of the deals, especially if it's over. And since we are long and it takes a long process to get that extra financing to help with you, that kind of tells you kind of what you need for that as well. Will help you with that process too, it's sometimes it's just asking us questions or calling us and, okay, what do we need? We're going to need your tax returns, your production history, your financial plan. Is it realistic, and things like that. So those are some of those things that you can do pre-done. We do not do a pre-qualification. Unfortunately, we don't have the staff or the finances, since we are government funded. Our loan amounts are determined, our loan, what we have available to loan is basically on a budgetary limit, I guess is what you want to say, every year based on the budget for the US government. So not that we haven't had problems with that in the past. So that's something that is a concern, and that's why we can't do a pre-qualification, because we don't always have the funding available like a bank would at that point in time. Hopefully that answered your question.
Yes, it does. Just the idea of helping young farmers have all of the necessary documentation. Do you have a fact sheet about sort of like Okay, so you're looking for land and you're thinking about buying, you're thinking about using an FSA loan for part of it. What information do you need to have on hand should you come across a parcel? Is there a fact sheet for that? I mean, obviously we should have been taking really good notes here, but
there are a number of fact sheets on our websites, on there. And part of it is just, you know, if you're gonna go for a loan, you gotta be, you know, you got to get your ducks in your row. You gotta get that balance sheet ready, your financials ready, and your plan. What are you gonna do? How are you gonna make money? How are you gonna make the payments? It's just the normal thing. You just like, oh, I'm just gonna farm. Well, that's nice, but you have to pay the loan back. So how are you gonna pay that loan back is what you need to do.
For us, and
Thank you, Darcy. So Michael had a similar question, but the second part of the question is, are there any ongoing reporting requirements to maintain the loan?
Let me
You
think.
didn't go right?
So when you're dealing with
a
your,
bunch of other things, a bunch of other things that require me,
Someone needs to mute.
nobody else, like not.
I can do that. Yes, go ahead. Darcy.
okay, sorry. So other information. So when you get a loan, we're gonna double check with you. You know, we're gonna go out in the field and look at your operation. We're gonna look at, you're gonna turn your financials in every year and look at that. We're kind of a temporary source of credit is what I want to say, because once you're able to, you're going, you're getting your operation ready, and you're making lots of money, maybe hopefully you're making lots of money, or you're doing well, we do require you to graduate to commercial financing when you're able to. So we're kind of a step process. We're here to get you started and going, and then into commercial credit. So part of that is to maintain the loan is field visits, turning in production, and financial information yearly, and getting that information to us. So.
You. Yeah, and as Emily put in the chat, we will send, we will make the recordings of the presentation available, and we will send also any, you know, links associated with the presentations, so you can have access to all that information. There's a question from Terrell. You mentioned business planning. What kind of program or services does that involve? Did you mention business planning? I mean,
Yeah, and we did. And basically we do have, we also work with SCORE, and they'll help with some business planning, or we'll point you to some different things kind of through the application process. A lot of people don't always know how to do an application. Part of that process is learning how to get all that information on the application, and, you know, walking through what kind of information you need, the tax return, a balance sheet, income and expenses, what's the cash flow. So we're kind of going to help you go through that process. And that's kind of more that business planning that we're going to offer you and help you get through. So.
Perfect. Thank you. Any other question before we move to the next presenter? Right. Well, thank you so much, Darcy. And so so we will have our 4 presenters, and we left some time at the end also for question and answers, because, you know, we figured you may have specific questions for each presentation, but then at the end, once you have all the information, you may, you know, want to go back to certain things, you know, and or see how different programs possibly linked to each other. So there will be more time for questions. Yeah. Again, use your chat, or at the end of the presentation, you can raise your hand or unmute. So the next presenter is Jess Sarsfield from AgWest Farm Credit. Jess is a loan officer, and as Darcy mentioned, sometimes they work with the FSA program. So Jess, I hope you were able to fix your audio.
He's calling in. I just admitted his number.
Okay. Can you hear me at this point?
Yes.
Okay, perfect. I'm calling in from my phone. Great. And I will go ahead and share my screen.
Right.
Okay. Okay, well, good morning, everybody. Let me put my camera on as well. Okay. And can you see the screen okay?
Yes.
Perfect. Thank you. Thank you. So my name is Jess Sarsfield. I'm with AgWest Farm Credit, and I work with young beginning and small producers in Western Washington. And I've been doing that with AgWest for 7 years. And today I'm going to review a little about the programs that AgWest has, and specifically the Ag Vision program. And I'm also going to talk about how loan decisions are made as well. Yep, perfect. So good job. So I'll be talking about the different products and services which you can see on the screen are real estate financing, operating lines of credit, equipment financing, crop and livestock insurance, and country home loans. And then we can stop in for any questions as well. And we can do questions during as well, that's fine. One of the great things about being in Western Washington is the diversity that we have, just from the geography that we're in. And this doesn't fully show the diversity that we have in AgWest, but it shows part of it. I think there's over 300 commodity type products that are produced with the producers that we have, which is pretty, that's a huge amount. So to give a little bit of background about AgWest, it's been around for over 100 years. It was instituted by Congress, so government-sponsored enterprise, and we're a cooperative, so we're not run by government, but we are regulated by government, and we're instituted by Congress. And so the structure is a cooperative, which means if you have a loan with us, you are a shareholder, so kind of referred to as customer members. And so you have a voting right as a stockholder, and then typically in cooperatives, there's economic participation, so you kind of help fund it. We're doing well as a cooperative, and so no customer members are funding, but they do commit to offering $1,000 in stock if needed. But no members need to do that presently. And then another advantage is that it's customer run, so the board of directors are voted in by the customer members, and the profits, part of the profits go to growing the association, and then another part of the profits goes back to the customer members in profit share. So there's an annual dividend that we've paid, I think, for the last 20 years. It's currently 1.25% of the average daily loan balance. That's what it's been at least for the last 6 years. Not guaranteed, but we have a really strong history of that, and it is it's been paid annually and it's decided annually as well. So another principle of cooperatives is education. So we have educational seminars. For our young beginning small producers, we have what's called the AgVision program, and we have an AgVision conference, and that is done through the Business Management Center, which is run out of Spokane. That's where our headquarters are as well. So we understand that, given that our target, we're mission-based. So we only loan to farmers, fishermen, ranchers, foresters, so producers of food and fiber. And we recognize that young beginning small producers have challenges getting into the industry. It's a difficult industry to get into. And so we've had our AgVision program for over 20 years, I believe. And that's the program that I've worked within for the last 7 years with AgWest. And so what that AgVision program tries to do is it just tries to help out young beginning small producers, and we'll define what young beginning small is on one of the next slides. But essentially the program does those things listed. It can waive a certain amount of fees. We give a preferred rate on the interest rates. Typically, we would risk rate. So the higher your risk, the higher your interest rate would be, which is probably very typical for any lender. But we give a preferred rate no matter the risk on young beginning small producers for their loans. Financial mentors, that can be the Business Management Center. It can also be relationship managers or loan officers like myself. And then we also have some reimbursements as well through the AgVision program. And then we also have the RateWise program. So attending something like this today, you could sign up for the RateWise. If you thought that in your future you might get a loan with AgWest, you can collect RateWise points for a future discount on a discount on a future loan with AgWest. So the way we define the young beginning or small is young is 35 years of age or younger, beginning is 10 years of experience or less, and small is annual gross farm production of 350,000 or less. So that's gross farm annual. And that's a way to qualify for the AgVision program. So to be clear on that one, you just need to qualify in one of those. So you could be a 50-year-old farmer, you've been farming for 20 years, but your annual gross is under 350,000, you would qualify for the AgVision program. This goes into a little bit more detail on the RateWise program. And then that's the agwestfc.com/ratewise is a way to get there. I can share this slide deck with anybody that's interested in that, and can be available for any questions as well. So what I wanted to just briefly go over was the 5 C's of credit, and this is what typical lenders are going to look at for loan decisions. And different institutions, different banks, financial institutions are going to look at, they're going to define these a little differently, but generally this is the framework that traditional lenders use. And I say traditional lenders, I'm looking at ones that kind of like banks or financial institutions that are going to analyze the risk, right? So you've got maybe non-traditional lenders that might be groups of people that get together and might provide financing to people in their community. They may not go through this, or maybe an angel investor or angel kind of lender that just says, I like what you do, here's some money, right? They're not analyzing the risk. but this is what is being done essentially, is the risk is being analyzed. And so, and then they're not in any particular order. It's just, they're all important. Maybe as lenders, we hone in on certain things, really try and get a feel for who this person is. And we can learn that through the resume, through meeting with you, through looking at your credit report, through looking at a little historical, like historically, what have you done? That can give a really good insight to your character and who we're dealing with. So even to the point of how you're presenting your, even your loan application and how you're, that can have an important, weighting as well. Just that it's a good application that's given back. So we might look at some, we're going to ask for a balance sheet, we're going to ask for tax returns, and we're going to look at credit report as well. Maybe you've got a business plan. We'd look through that. If you do a business plan, I wouldn't go into extreme detail. I think it's good to be detailed, but being concise in a business plan, I think, is really important. And I think having a business plan is a really good idea as well. How involved are you in your industry? Just maybe work experience. Do you have the experience needed to do what you want to do? Do you have those skills? So that all goes into character. Then this just shows. So this is your credit report. Your credit score is important. It kind of shows how you've been managing your credit. I think it's important to keep debt low as well, to be less leveraged. I like to see conservative borrowers, so borrowers that don't have a lot of outstanding debt. So keeping that debt in check, I think, is really important as well. This here just shows what goes into a credit score. So payment history, so that's the most important thing. Pay on time. Don't max out your debt, right? So I typically hear don't go above 40% of your outstanding credit allowance or commitment. So if you have a $10,000 credit card, don't carry as a balance month to month more than 40%. And then length of credit history goes into it, but obviously less than the first two. How much credit you're applying for, and then I guess mix of account types like mortgage and a car, maybe a personal loan, credit card, those kinds of things. I sometimes hear people say, "Oh, I took a loan just to build my credit." Like I don't know if that's a great strategy. Use credit as you need it. Use it conservatively. That's what I would say. You do want to have some established credit, but you can do that, I think, with a credit card. Just carry a balance for a couple months and then pay it off. That can do just as much, I think, as getting a loan for some purpose that you don't really need. But yeah. So the higher the score, the better your credit. But it takes a while to get a higher score, and it doesn't take long for that score to tank. If you do something wrong, it can really make that score go down. There is annualcreditreport.com. That's a great resource to just check your credit and see where you're at. If there's some big movement in your credit score and you're not sure why, you'd want to check it. But just if your credit score is staying fairly consistent, and any credit card gives the credit score these days, even some bank accounts, I think you can have, they provide a credit score. So real easy to monitor, and there's lots of info from those kinds of credit card apps or online of how to improve and manage your credit well. But that's all part of character. Capital is, we kind of referenced it a little bit in the balance sheet that you would be providing, and that's where we're going to see as well what debt you have. you definitely want to make sure you're listing all your debt on your balance sheet. We'll see it on a credit report. So you want to make sure that that information is fully on there. And then your balance sheet just kind of shows what equity you have. It shows maybe what additional resources you might have. If you're having trouble maybe with that monthly cash flow, or, you know, do you have a good amount in savings that you could rely on? Do you have some other accounts, maybe stock accounts you could rely on? So those are good things to put down. So the balance sheet, essentially it balances, meaning one side equals the other, and that's assets equals all your liabilities plus what you own or your equity. And so those two, the total assets and then total liabilities and equity will always be the same number. If it's not, you haven't done your balance sheet right. That's the balance sheet. It's a really simple business tool to have. I have a copy of a balance sheet where you can just fill out the blanks and it'll do some auto calculations for you. But here are some reasons you'd want a balance sheet. It will help you make business decisions. It can show you a trend of where you're at. So if you have one balance sheet, okay, it gives you a certain amount of information, but you probably want to compare it to something, maybe average industry balance sheet or somebody else's balance sheet that maybe does some similar things to you. But another thing you can do is use it year to year. So if you do it, let's say at the end of the year, every year you do a 12/31 balance sheet, then you can do one each year, and then you can compare those years and kind of see where you're headed. You know, are you going more into debt? You're getting less out of debt? Is your equity growing? So it can give you good information like that. But other information it will give you is it can help you understand if you're over leveraged, if you've got too much debt, if you can take on additional debt. And so there's essentially three ratios that a balance sheet, or three pieces of information it will give you. It will give you your debt to asset ratio, it will give you your current ratio, and it will also tell you what your working capital is. And the balance sheet I have just calculates those things. And so you don't have to even calculate it. It just tells you what those things are. And then your working capital is just, you know, what funds do you have available to pay your, you know, it's total, it's current assets minus current liabilities. So what it's saying is, do you have enough cash to operate with? And then your current ratio is just calculating if you have enough assets to, enough like liquid assets to pay for your bills in the next 12 months. So great information. I'd encourage you to do balance sheets if you don't already have one. And it probably it'll only take you an hour or so to do that. Capacity is, so you're going to get a loan, you're going to take one, and this is maybe in essence, this is, I would say, the number one thing that any lender wants to know. This is what the loan decision hinges on. Let's say they're okay with your character, they're okay with your capital, they're okay with the collateral, and that, you know, you're going to come to an agreement on the conditions. This is the one box that needs to be checked off. Do you have cash flow? Do you have the capacity to repay the debt? And every lender wants to know that this is a yes, that you do have that. At least any lender that analyzes risk, any traditional lender will want to know, yes, you have the funds available to repay. And that's done through looking at taxes, maybe leaning on projections a little bit. When you are doing something new, you probably need a loan to scale up, right? And that's I think where people like the Farm Service Agency, other ag lenders, AgWest are able to help out, is helping you scale up. But that typically means you need to purchase additional assets. And so I can lean into, for AgVision customers, I can lean into the projection somewhat, but you really want to be conservative with those. And we want to know that you understand your production, how you process, and how you market. And you can be doing it at a certain scale, and you've done it for a while probably, and you've got a good feel for the market, and the market's telling you certain things, and you know you can do more. You know you can maybe double that production and still maintain the pricing that you've got, and maybe it makes more sense, and you're more profitable doing it at a larger scale. And so you want to be conservative with those projections, and you want to have them validated probably by some historicals, even if it's not the exact same numbers. And then that all comes back into, with this loan amount, is this going to work? Right now, we're I feel like rates have ticked up a little higher. Another great reason to really understand what the Farm Service Agency has to offer. Their rates are unbeatable. I always say it's because they own the printing press for the dollar, those $100 bills. They can switch the printers on. We can't, but no, the Farm Service Agency are going to be a great partner and a great option to look at. And so really recommend looking into the programs that they have, and they partner with lenders too, so you can have two separate lenders and really able to make something work. Rates are a little high. They're probably a little higher right now than historical average, but maybe they're just maybe they're really kind of where historicals are. If you're looking at rates and you want to do some research on it, they're probably going to reference mortgage rates, so home mortgage rates. And I think I did a Google search, like what's the average rate in the last 60 years or something like that, and it's around 7%, and it's referencing a mortgage rate that you'd get from a mortgage lender. So kind of a non-commercial rate. Commercial rates are always going to be a little bit higher than that. They're underwritten differently. There's maybe more risk in it. And then, so I don't know, we're probably in that average kind of area, I think, where rates are about kind of the average of what they've been, but it feels higher because we had lower rates for so long. But anyway, capacity, really important to get that. The next is the collateral, and typically the collateral we'll take, and we may take different collateral or additional collateral, but the collateral is kind of like a plan B, or it's what we're financing, right? So if we were financing some land, we would take that land as collateral, and that means that you're giving up, you're guaranteeing that asset for your loan. That's the collateral side, and that's an important what are the conditions of the loan, how's it going to work, and this is where you've really got to ask your lender questions and understand just all the, yes, you want to get approved if you're applying for a loan. Obviously that's a really important factor, but you also want to understand how that loan's going to work, and those are the conditions. Is it a monthly pay? Is it a quarterly pay? Is the rate fixed? Is it going to change any time? Do I need to reapply for a loan? All those things are really important. Is the prepayment penalties? So a good way to sum this part up is the large print giveth and the small print taketh. So just understand that small print, maybe that you'd find in the note, the loan agreement, and just having a good conversation with your loan officer as well. This is my last slide, and really I just wanted we have a department that does country home loans. I don't do country home loans, but I have counterparts that do, and this can sometimes be it can be a good option. They can do builds, they can do larger acreages. I think if you're up to 250,000 in that gross farm income, you could work with a country home loan. property person, and there's advantages and disadvantages, but it's just another program that it's probably good to be aware of. Yeah, so that's probably loan decisions in a nutshell, and AgWest in a nutshell. But yeah, open to any questions.
Thank you, Jess. Yes, so if you have questions, you can put them in the chat or raise your hand or unmute and ask your question. So I have a question for you. So if Darcy mentioned earlier, you know, how long it takes to work with the FSA for someone needing a loan. So like if yes, someone wants to buy farmland, do they go see you? Like how long would you say it could take to take a loan if they come with the information that you mentioned? Um, how fast can that process be?
That's a good question, Maxime. So I would say that I mean, for a land loan, you gotta, if it's just with AgWest, let's say, I would say you're probably looking from the time that you get under contract and you provide an application. You're probably realistically looking at about 90 days, I would say, or up to 90 days. If you're doing like an FSA joint financing, I believe, and I don't want to answer this necessarily for Darcy, but it can be up from 4 to 6 months. It could be longer depending, but typically what I see is it's around, I've honestly seen it be more around that 4-month mark, but it can be longer. And some of it depends on the property type. And it also depends on how ready you've been and how organized you are as well with information provided. And so I think it's probably, I don't think you necessarily need to say to the buyer or the seller, sorry, I don't think you necessarily need to tell them like, hey, give me 6 months. But you might want to say, give me 90 days, and if needed, have a clause in there that says, if the financial institutions I'm working with need extra time, we'll allow them to we'll allow an extension if they need it. And so you might have a close date, but having a clause that allows for extensions is going to be important. Hopefully they understand as well that you're working, you're going to be upfront. They're going to want to know who you're working with, and you let them know that. And so they at least would understand that you're working, it's not a residential loan, it's a commercial loan. Or it's non-consumer. It's not a consumer loan. Those loans go a lot faster, they can close in 30 days. I'm not saying they all do, right? They can take longer too sometimes. But when it's a commercial loan, the seller should, at least, even if they don't fully understand it, they should be made aware that maybe through their realtor or just through the process, that it does take time. And so I would say be looking at least to start the contract at probably 90 days. Now, you could always do 60 days if they want to say, hey, we want to get this done in 60. It's okay, 60 days, but make sure that contingency is in there that says we will, you know, if my financial institution needs it, we'll allow an extension. I wouldn't say the exact extension, just kind of, I would leave it just extension by them. So leave it, give it to them. And yeah, but I think having those conversations, if this is something you're already doing, what I typically see is that people who have that goal, you know, it's part of their operational plan and business plan to own real estate, but do not have the funds. So you know that you're going to need a loan for this real estate, but it's part of your business plan. It's what you know your business is going to need, or how you're going to want your business to be. You need to talk to the lenders early. You need to get those relationships and understand some of the things that you need to do, because it may not be something you do tomorrow. Maybe it's something you're going to do in 2 years. If that's the case, speak to your lender today so that you can be more ready in 2 years. You don't want to call them in 2 years' time and say, hey, I'm ready. And they tell you, well, actually, you're not, because you haven't done these things. And you could have thought, if I'd known this 2 years ago, I'd have been ready today. So have those conversations. And yeah, I know it's not easy. It's not an easy process. I see farmers looking for land for quite a long time. And I worked with one farmer who said there was a lot of pieces of agriculture. You know, they looked at different offerings on the market. They looked at different real estate. But in the end, they said it was just part of the journey. They learned from each experience, and it's the journey that they took to get them to the land that they actually ended up buying. And they ended up buying, you know, I think a 40-acre piece, and it was the right piece for them. You have to do that discovery, and it took them longer than what they thought. They were already operating as farmers, and it just took them a long time, but they realized it was part of the journey and part of what they needed to do. And so I think you need to look at it as a long-term thing and hopefully not get discouraged. And the great thing about not finding the land yet is that it gives you more time to prepare, so that you really are more prepared for that land and real estate, that farm property, when it does become available. So I think as you're looking for it, you're continuing to improve your business, you're continuing to get ready for that purchase. I would really look at that time as just a gift to get more ready for when you do find the piece of property that is right for you and your farm business.
Thank you for that. That's really helpful. Any other questions for Jess?
Here's one other thing I'll say. I recently listened to, I didn't read it, but I was on Audible and I listened to the E-Myth Revisited. I've heard of the book, and I was like, the E-Myth, it's the entrepreneurial myth. And I think it applies to all businesses. And yeah, there's fluff in it, you know, there's stuff that you're like, okay, but there'll be some good things you'll learn from that book too, as a business owner. And I think it kind of puts into perspective some of the hats that you wear as a business owner. And so I think that book is worth reading, The E-Myth Revisited. It's an older book, the principles still hold true, and I think it might shed some light on your business. One of the things it said in there was, every business owner goes into business to eventually sell their business. And that's true. You eventually want to be able to sell your business. That's where a lot of farmers are today. A lot of older farmers that they're in this transition period right now, which means there's opportunity. But they're selling what their business was. And it may not be, you know, their business now might just be the real estate. It might not be necessarily a turnkey business, but that's the remnant of their business. Anyway, just another little another little nugget to throw out there. But hey, I know, if you don't have time to read, just get it on Audible, just listen to it. I know time is difficult, but just another thing to throw out there.
Thank you for that. Like Emily put in the chat, we will add that to the resources of the workshop. Any other questions? All right.
Well, I'm glad to know I answered most questions, so that's really good. That makes me feel good.
Very informative. Thank you.
Thank you very much.
Thanks. So I don't know how folks are doing, but I was thinking maybe we could take a 5-minute break just to get a few steps in or go to the bathroom and okay, and then come back just so let's say at let's take a little more, and 10:20 we will all be here ready to start again. All right, so see you all in a few minutes. Hello again. Maybe if you can just put a thumbs up or something to show that if you are back. Coming back. Okay, looks like people are coming back. Thank you. Right, it looks like most of us are back. Welcome back, everybody. So we are now after Darcy and Jess. Oh, yes, recording is still going on. And now we will hear from the American Farmland Trust with Addie Candib, who's the regional director. And I'll just handed it to you, Addie.
Thanks, Maxime. And thanks everyone for being here today. Really happy to chat with you. For those of you who don't know me, again, my name is Addie and I work with American Farmland Trust as our regional director for the Pacific Northwest. And if you're not familiar with AFT, we are a national nonprofit dedicated to saving farmland, promoting sound farming practices, and keeping farmers on the land. And my team serves Washington, Oregon, Idaho, and we're doing a little work in Wyoming as well. And I am calling in from Bellingham, where I live. My presentation today, we're gonna zoom out a little bit from talking about financing to talking about some creative land access strategies. So give me just a second here. Those slides look okay, Maxime? Or do I need to go into presentation mode?
Yeah, I think you just need to go to presentation mode.
Okay, here we go. Does that look better?
Yes, perfect.
All right, thanks. So those of you who have heard me speak before know that I like to start with some definitions and big picture concepts. So I want to start by talking about what is land access in the first place? What are we actually talking about today? So really at its core, land access is the way that farmers and ranchers and other food producers acquire land to support their operations. Pretty basic. So there are three basic paths to arriving at land access. One is inheriting or accepting gifts of land. The second is buying land, and we've already heard quite a bit today about some of the financing tools that are available to you to make it possible to buy land. And then the third is leasing land. And the right path for any individual or farm business is going to depend on their goals, their needs, the reality of what they can afford, and what's available. So why are we talking about creative land access? Why that word? So it won't come as a surprise to most of you that in the context that we're operating in right now, most agricultural land in the country, and the Northwest is no exception to this, is owned by elder white farmers. Land is increasingly unaffordable, or increasingly expensive and therefore unaffordable, particularly for small producers, due to development pressure and other kinds of conversion of our agricultural land. It's increasingly scarce. And I think we're also seeing some shifting values around how people want to get on land. More people, and Alex can speak to this a little bit later, more people interested in farming in groups or farming in collectives. So that's sort of why we start talking about what are some other strategies? How do we get outside of this leasing, purchasing paradigm? What are the other options? And the other thing I like to stress when I talk about this is what's the end goal when we talk about creative land access? Because you can get really creative in the different ways that you get on land, but not all of those strategies are going to result in stable, secure, and affordable land tenure. So I always like to start by saying, my end goal in doing this work is that all farmers should have stable, secure, and affordable land tenure, that we're investing in sustainable land stewardship, strong local food systems, and food sovereignty for our communities. So what makes a land access strategy creative? Spoiler is that most creative strategies are still going to involve some form of lease, sale, or gift. So what changes to make a land access pathway creative? And I like to talk about what I call creativity levers. Sort of imagine a lever that you pull to change something. So the levers are who leases out or sells the land, who leases or purchases the land, and then the terms of that lease or sale arrangement. So under kind of a conventional model or a conventional land access transaction, you might have a piece of land that is owned by a sole proprietor and they lease it to a farm business and they have a 5-year lease. Or sort of in many of the situations that Darcy and Jess work with, you might have a sole proprietor who is selling the land to either another sole proprietor or an LLC. And it's a pretty straightforward agreement as far as the purchase and sale. Under the creative model, when we start to play with who's leasing or selling, who's leasing or purchasing, and then the terms, you might have something like a city that owns a parcel of land and they lease that land to a nonprofit. And then that nonprofit subleases to new farmers. And that sublease agreement includes housing and shared infrastructure and technical assistance. It's still at its core a lease arrangement, but we've played with who the parties are, and that makes it creative. So what I'm going to do is I'm going to walk through, hopefully pretty briefly, I'm going to walk through 9 different sort of what I call creative land access strategies and talk a little bit about what makes them creative. But before I do that, I always like to sort of acknowledge in this work that creative land access is not new. It may be new for some of our agricultural service providers like myself to be talking about it, but it's not new. So the first thing is to acknowledge that the land we live on and farm was for millennia stewarded by Indigenous peoples whose management practices balance the need for food with the health of the landscape, and that their relationship to the landscape did not involve ownership at all. Secondly, many of the strategies that I'm going to talk about today have their roots in communities of color and queer communities and other communities for whom there is a long history of shared or collective ownership because they were denied access to resources and denied or excluded from institutions. And so were forced to become creative about creating sort of building systems for support and safety and land access. The image here on the left is from the New Communities Land Trust in Albany, Georgia, which is one of the first community land trusts founded by Black folks during the civil rights era. And at its height encompassed several thousand acres of agricultural land. And the image on the right here is an image of Sandor Katz, personal hero of mine, a fermentation expert. But for this, I put him in here because he is one of many gay men who have found sanctuary in agricultural communities in rural Tennessee. So just a little bit of sort of historical cultural context for where this work and this conversation fits in. But like I said, I want to talk through these sort of 9 different strategies around creative land access. My goal is not to provide an exhausting index of all the entities in Washington who are offering these services, but just to give you some examples. So the first I want to talk about is institutional leasing. What is it? It is leasing vacant land from a school, a church, or some other land holding institution. What makes it creative is that you're using land for food production that otherwise might not be farmed. And this picture here on the right is from the Paradise Parking Lots Community Garden at Hillside Church in Seattle. Some things to think about when you think about institutional leasing is that these kinds of opportunities may not be publicized. They may only happen if they're requested by the farmer or suggested by someone within that institution who says, hey, we've got this extra land. I wonder if we could make this available for a garden. There may be constraints on when and how the land can be used. And I think about a story of a refugee farmer in Boise that a colleague of mine was working with, and he approached a local church in his community about leasing some of his land. However, the church's stipulation was that he not farm on Sundays. He worked Monday through Friday. So the only day that he could really get out on his land was on Saturday, and that was pretty limiting. So it wasn't a great long-term arrangement. And then, partnerships with faith-based institutions and other institutions may not feel safe or be a great values fit for some farmers. But this is an opportunity because there are a number of institutions in our communities that have access to or who own large amounts of land that is typically in lawn or in landscaping, and there's a lot of inherent potential there. Next, I want to talk about municipal leasing, and what I'm referring to here is leasing vacant land from a city, county, or other government entity. And what makes this creative is you have municipalities really increasingly looking at managing the lands that they own for a broader community systems benefit. Now, this isn't new, right? There is a long tradition of public lands in the West being leased, especially for ranching operations, by federal agencies like the Bureau of Land Management, State Department, Department of Natural Resources. But I think what's new here is cities and counties looking at leasing land for smaller scale agriculture. Now, like in any situation, the land available may not match farmer priorities or needs. There may be a lack of transparency or strong outreach about the availability of this land. Partnerships with local governments may not feel safe or like a good values fit for some farmers. And there may also be increased compliance requirements or things that farmers are expected to adhere to because it's government-owned land. But again, a great opportunity. And just a couple of examples of this work happening regionally: the King County Local Food Initiative. San Juan County has a conservation land bank where they own and lease out some land. Bainbridge Island, City of Bainbridge Island, partners with a nonprofit called Friends of the Farms to make some land and housing available to small farmers. And I did share out a PDF of the presentation with Emily, and it does have hot links to all of these examples, so you can check them out further. Next, I want to talk about incubator farms. Incubators are usually temporary, affordable access to small parcels of land. They often make access to equipment and training available, and these are typically for new and beginning farmers. So what makes it creative is that they are small parcels. There's this shared equipment and other resources. There's technical assistance provided, as well as peer support and networking. We have a lot of great examples of incubator farms in our region, including Viva Farms, Cloud Mountain Farm Center, historically, and Headwaters Farm down in Oregon, as well as the Raíces Cooperative Farm in the Dalles. These are typically short-term leases. They are not giving producers the ability to build equity in the land or the infrastructure. And I think what we've seen in the last 5 to 10 years is that because of the price of land, it can be difficult for small businesses to transition out of the incubator into other land tenure arrangements. I know that that's something that folks like Viva are really increasingly thinking about. But I think the important thing to highlight is that these can be a great place for folks to get started and get support with business development as well as the land access piece. Moving forward, non-familial succession. I include this because this category is really about the intentional transition of farmland between farmers who are not related. What makes this creative is that over time in a non-familial relationship, both knowledge and experience are transferred alongside land and infrastructure. And there are a lot of different examples or permutations for how this can work. A couple of examples, I include these two because they're hot linked to stories about both of these farms. Blue Heron or Long Heron Farm up here in the Skagit, and then River Hill Farm in California. These types of arrangements are going to be very dependent on personal chemistry and mutual commitment to the process. These transitions can take years and years to finalize or to complete. And they can require a lot of deep support and technical expertise, but can really be very beautiful transitions as far as honoring the legacy of stewardship from between one generation and another. Now I'm going to talk a little bit about easements and land trusts. And AFT is a land trust. Washington Farmland Trust, who you're going to hear from, is a land trust. And land trusts work in different ways. We have an amazing tapestry of land trusts in Washington who are working to support farmers. And at the end of the presentation today, I'll share some more resources. If you are considering working with a land trust, there are some things to know. At its core, what the work that most land trusts do is to use a conservation easement to remove the development rights on a piece of property. And what that does is it makes the parcel more affordable, it reduces the purchase price, and it also protects that land from development in perpetuity. Something to know about working with land trusts and using the easement model is that there can be a long time frame. It can take a couple of years for land trusts to line up the funding they need to purchase that easement. In today's marketplace, land can still be quite expensive with the easement. And the land trust priorities for what they want to protect may not be a match for what the farmer wants to access. And a great example of that comes up often when we're talking about size. So a farmer might be interested in a 5 to 10 acre parcel, whereas land trusts can sometimes be more interested in protecting larger parcels. And I would say on the whole, farmer demand exceeds the current available funding and land trust capacity. But that said, again, we do have a number of really fantastic land trusts working in this space in the region, and I'm always happy to talk more with folks about this piece in particular. The other sort of aspect of land trust, and this is not as widely practiced in the region, though I think increasing, are land trusts who own land and lease it out to farmers using a 99-year lease. What is very creative about this particular model is it's not just a lease, but it's a long-term lease. It gives the farmer the ability to build equity by owning the infrastructure. And those leases are inheritable. So it means that the farmer could pass that lease on to the next generation of their family. Again, like working with land trusts on the easement model. There's a long time frame. The long-term leases may be intimidating for new farmers who are just starting out and say, you know, I'm not ready to sign a 99-year lease. How about 5? Land trust priorities, again, might not match farmer priorities. I think the biggest hurdle is that this is still not widely implemented in the Pacific Northwest, but I've posted a couple of examples here. The Community Farmland Trust in Olympia, Crabtree Farm with the Evergreen Land Trust, which I think is in Snohomish County, and then the Lopez Community Land Trust in San Juan. I have a couple more examples to go through, and then I'll wrap it up. Agrivillages is another great example of sort of a creative approach to land tenure or land access, where you're combining communal living and small scale farming. You've got a bunch of people living on a piece of property. Some of those people are growing land for the community as well as for sale. These are pretty unique situations. We only have a couple that I know of currently. One is the Yarrow Eco Village up in Chilliwack, and then Rooted Northwest, which is a new project in Snohomish. But I think it's evolving and definitely something to watch. One piece that I do think is really exciting about this model is the relationship between housing and land access, since we know that as much as land access is a challenge, housing in rural and agricultural communities can also be a big challenge. So this is one where those two things come together. But even there's also downsides to farming in community and farming on a site where you have a lot of other people living. And the farmer priorities may compete with other community priorities. You may have a lack of control over who comes and goes from the land. And then, of course, still not widely practiced here, but definitely something to keep a watch on. Nonprofit stewardship, I think, is a model that we're seeing a lot more of lately. And this is one where a nonprofit holds land and then provides a way for community members to engage with agriculture. What makes it creative is that the nonprofit model makes it possible to leverage grants, philanthropic funding, and volunteer labor. And I've got a couple of examples here. Now, something to consider for all of you is that these models don't typically facilitate access for individual businesses. They are usually more about a nonprofit making space for people to come in and learn or volunteer rather than operate a business, which can still, depending on your goals, can still be really worthwhile. Nonprofit management is equally complex, if not more complex, than managing a business. And while it can seem really appealing to go after grants and philanthropic funding, there's still a lot of competition in that space. So it's definitely not a silver bullet to say, let's just become a nonprofit, because then we'll sort of be eligible for grant funding. But this is certainly a tool in the toolbox. And then the last one I'll talk about is land returns and reparations. This is a movement to repair the harms of colonialism by returning control of ancestral land to indigenous groups, typically. And what makes this creative is that it's really addressing and attempting to repair historic land theft and discrimination, and is about shifting ownership of resources into the hands of marginalized communities. It's not widely practiced to date, though I think there is growing recognition that we need to be talking about it. I think I like to include it because I think it's a piece of the puzzle, and I think it's a direction that we're moving in, but it is difficult for a land-seeking individual or group to actualize on their own. Because in order for this to happen, the entity that owns the land has to decide, okay, we're ready to give this back. But there are a couple of examples in the region, and then I also have a link to the Soulfire Farm reparations map where people can post from all over the country and say, hey, I'm interested in reparations. There's also a very cool treaty land sharing network in Canada I'd love to see replicated in the US, where folks who do own, privately own ancestral or indigenous lands can make that land sort of open or available to folks to access. So I think just as I'm wrapping up here, with all of these models, it's gonna come down to what is the best fit for you and what model is gonna be the best match for your needs and your goals. Do you want to lease land or own land? Do you want to be a single business owner or be involved with multiple other business owners? Are you interested in short-term tenure because you're just getting started, or long-term tenure because you're really ready to commit to this? Do you want to engage with like a very institutional and structured process, like working with a land trust? Or are you comfortable in a more unstructured, uncertain process like non-familial succession? Are you farming for profit as a business, or are you farming for subsistence and community benefit where a nonprofit model might be more appropriate? Do you want to access and invest in capital, like by getting a loan? Or do you want to avoid that because you don't have the capacity, or, you know, it sort of goes against your values? So I think these are important questions to sort through before you start trying to match yourself up with any one of these particular models. And then my last slide here, just to say, these are some of my favorite resources when it comes to creative land access. Again, there's hot links in the PDF that Emily will send out. I think all of these are worthwhile depending on where you're at and which direction you're moving forward with. That fourth one, Finding Farmland, A Farmer's Guide to Working with Land Trusts, I'll just call out because I think if you are talking about working with a land trust, you should definitely sit down and look at that one first. And I don't know if I used up all my time or if we have a few minutes for questions.
Thank you, Addie. Yes, we do have time for questions. Yeah, thank you for that. It's really helpful to, you know, typically you would think of access to farmland. It's like, oh, either you lease or you buy. But then there are many ways of leasing and buying, you know, right? So I think that's a great way to think about it, is how can we be creative to allow access to farmland. Questions again in the chat or directly to Addie. A few seconds for people to type their questions, maybe. So while we wait, maybe I had a question about so the process of the farmland trust buying an easement, and you did mention that it can take a couple of years or something for a transaction like that to go through. And my question is, what kind of seller do you see that is willing to go through that whole process with you and the buyer? I'm guessing they must be very motivated in terms of protecting the land for farming.
Yes, I think that's the stew that often landowners who are interested in putting an easement on their land are pretty motivated to protect their land, and they are potentially a couple of years away from wanting to retire or transition their land or sell it. So they have that longer time horizon and they're able to be patient. Now, something I didn't talk about is something that in the land trust world we call buy, protect, sell, which is I think it's a tool or a strategy that land trusts are increasingly using in Washington, where a property comes on the market, the land trust accesses a loan, and they buy that land to take it off the market, and then they own it, and they take a couple of years to put an easement on the land and to resell it to a new farmer. I think it's a really important tool for us because there's the potential for a farmer to identify a parcel and come to the land trust and say, I want to buy this parcel, but it's going to take me 6 months to get my financing lined up. Can you step in and buy this and then work with me to put an easement on the land and sell it to me? And we're really fortunate here in Washington that we now have a new loan fund that land trust can access to support those kinds of transactions. But I would say the caveat is demand outweighs the capacity and the funding. And I think our land trust community is still building its skill and confidence in doing those projects. So I think in 5 or 10 years, we'll be in a place where that's a much more common approach. But for now, there are still really just a handful of land trusts that have some experience under their belts. But it certainly, I should really make a new slide in this presentation about that strategy.
Yeah, thank you. That sounds like a really good way to do it. Because I mean, although farmland typically farmland sale takes longer than a house or something, but still, like the sellers are not always willing to wait that long for something to happen. So,
yeah.
Other questions for Addie? All right. Well, I don't see any. So thank you again, Addie, and we will go to our last presentation today. That will be Alex from the Washington Farmland Trust. And who has another creative way to approach access to farmland. So, Alex, it's all yours.
Hi, everyone. Good morning. Addie, thanks for that wonderful presentation. I'm going to expand a little bit on land leasing and land leasing best practices today, and I'll share a little bit about Washington Farmland Trust, the Farm to Farmer program, and my collective's work as well. So I will try and get this PowerPoint going. I have been having some internet connectivity issues, so I may jump off camera. If I freeze or anything like that, just, wait patiently. I'll try to pop it back on. Okay. Can everyone see my main presentation slides here? Wonderful. Thanks so much. So thank you for taking some time today to get to know Washington Farmland Trust and the Farm to Farmer program. And thank you for your interest in learning more about how to access land to start or grow your farm business. I'm going to share an organizational overview of Washington Farmland Trust, and I will focus a little more on the Farm to Farmer program today. Then we'll move into talking about best practices and finding land to lease as you start or grow your farm business. So first, I'll share a little bit about myself. My name's Alex Machado. I'm the Farmer Collectives Manager for the Farm to Farmer program. I am a livestock farmer and a rancher raising Navajo churro sheep in a small town outside of Spokane, Washington. I co-facilitate a women's educational immersion focused on ranching and holistic management. It's called New Cowgirl Camp. And later on in this presentation, I'll share a little more about my collective's work with you. This is the mission for Washington Farmland Trust. Since 1999, we've been dedicated to the essence of this mission. There's more information about this on our website, so please take a look at there if you are very curious about the work we do. Our values guide everything we do and are reflected in our day-to-day work. Again, you can read more about our values on the website. I've included a link there at the bottom if you'd like to read more about our values and our accountability. So this is a map demonstrating where some of the farmland we have protected with conservation easements are located. Here are some pictures of the farms we've helped conserve, including Four Elements, Bailey Farm, Pink Moon Farm, Wild Hare Farm, Mountain View Farm, Olson Farm, and Hughesby Farm. Having shared a little bit about Washington Farmland Trust as an organization and our land conservation strategy, I'd like to share more about the Farm to Farmer program and how our land access work has been developing. The Farm to Farmer program is likely where most of you farmers would interface with us. This program exists for farmers like you so that you can get the resources you need for your enterprises to thrive. So over the years of doing important work for securing conservation easements for agricultural plans, it became clear to the trust that although conservation easements are a really useful tool, we needed more tools to meet the complex needs of farmers. National Young Farmers Coalition conducted a survey that identified the top 2 barriers to farming as a lack of access to land and capital. We continued to see how development pressure was quickly driving the price of farmland pretty sky high. And we knew that from working with farmers for years that secure land tenure is critical to the success of new and growing farm businesses. So this led to our own feasibility study. And from there, the trust decided to launch the Farm to Farmer program as a way to address some of those needs. So what is Farm to Farmer? So at Farm to Farmer, we offer personalized support to current and aspiring farmers, farmer collectives, cooperatives, farm organizations, and farmland owners in Washington state. We work with program participants to co-create plans that advance their farm business and their farmland stewardship goals. We also partner with service providers such as lawyers, realtors, accountants, financial institutions, and community development organizations to provide direct support to our participants. And an additional part of our program is our land linking website, where those with farm businesses can make connections to farmland owners and other farmers. this is just an example of some of the types of folks that we serve for the Farm to Farmer program. So if you fit in this category, please reach out if you're looking for more resources for your enterprise. If you are a service provider and you're interested in working with us, I would also love to hear from you. So here's a little comprehensive data that reflects the work we've done since the beginning of the program. On any given day, Farm to Farmer has roughly 200 active listings. A fourth of those are land listings, and 3/4 of those are farmer listings. We're continuously working and strategizing on how to balance that out a little bit more. And currently in the works, we are developing some landowner outreach strategy to bring some more land opportunities into the land linking program. Oops, skipped one. So this is our Farm to Farmer team. We are a small team of 3, and we are a statewide program. So we have to get very creative about supporting our clients and making sure that we are providing equal attention and resources for our farmers statewide. We're also a bilingual team. All 3 of us speak Spanish fluently. And recently we partnered with a translation service so that we can offer meetings in a variety of languages. We're still growing our list of strategic partners as we begin to reach out across the state. We couldn't do our work without partnerships with other agencies, statewide organizations, other nonprofits, and local and regional groups. It's a collective effort, and we are always looking to expand our service provider relationships. I'm going to talk a little bit about collective farming, some of the work I do as the collective farm manager, or the farmer collective manager, and a little bit about what collectives are and what collective farming might look like. I want to share a story with you all. I think showcasing our farmers is a great way to highlight some examples of collective farming. And I'd like to feature Ubuntu Naruto today. This is Ken and Ranga. They are the founders of Ubuntu Naruto. I first met them back in September of 2023 when I signed on with the trust. And I was immediately taken by their passion for farming and their mission to cultivate a community with a focus on supporting immigrant farmers and celebrating their African culture. So in addition to providing spaces for African immigrants to grow culturally relevant crops, Ubuntu Naruto has a goal to bring Americans and African immigrants together to participate in something called Nimbe, which I learned from Ranga. It's a beautiful Swahili word, to learn about the significance of food, land, and community. Ubuntu Naruto currently farm 1/2 acre at Small Axe Farm. It's a 4-acre farm incubator managed by the Black Farmers Collective, whom I also support. Oops, go back. Ken and Ranga have been working towards a goal to own land and create an educational African village where folks outside of the African community can come hear farmer stories, experience harvesting crops, learn to prepare some traditional foods, and share them over communal meals and storytelling. And that is the essence of Nimbe. My relationship with Ranga and Ken has really opened my eyes and motivated me to continue learning about the challenges, keeping other groups of farmers, especially historically underserved groups of farmers, from accessing farmland and finding ways to meaningfully support and advocate for change. The work I do through Farm to Farmer in supporting our collective clients really focuses on understanding the farmland goals, the farm business goals, and clarifying what each of us can do to help advance that work. Some of the work I've done with Ubuntu Naruto looks like reoccurring meetings to share updates, solve problems, and identify next steps. Clarifying how to evaluate land for their particular project. We've been exploring funding opportunities, and in the case of Ubuntu Naruto, has resulted in an application to the King County Conservation Futures Program, as well as the Healthy Communities and Parks Fund, which, if successfully completed, could result in several $1 million to purchase farmland in King County. That's just one of the opportunities that we can share with other farming collectives and organizations. And then Libby Reed, our statewide manager, works with individual farmers to strategize funding opportunities. So what is collective farming? At Farm to Farmer, we acknowledge that there is a growing need for technical support with a focus on collective farmland access. Collective farming is not a new idea. Collective food cultivation has been practiced by indigenous peoples long before private ownership came to occupy the Western world. In 1909, the first kibbutz, which is a communal living, kind of a small village centered around collective farming, was founded in Israel. By the 1950s, most of Eastern Europe and China, Vietnam, were practicing collective farming. Collective farming is becoming increasingly more popular. Some of the reasons why folks are opting to farm collectively and access land collectively. A big reason, farmland access. The cost of farmland is extremely prohibitive. Collectives are able to pool more resources and access unique funding opportunities. Economies of scale can be achieved. Collectively, purchase inputs such as equipment or infrastructure, collectives can purchase inputs such as equipment or infrastructure at a lower cost than individual farmers. This can help reduce production costs and increase overall efficiencies. Collectives are working communities that encourage the sharing of skills and labor. And collectives are community-centered. Most collective farms tend to be mission-driven and promote knowledge and sharing and lead by example. Time check. So we're going to move into the second part of the presentation, where I'm going to focus a little bit more on finding land and leasing land and best practices for leasing land. I would love to try something out with you all. Just trying to gauge the audience. If you wouldn't mind self-identifying in the chat. If you're a farmer, type the number 1. If you're a landowner, type the number 2. And if you're a service provider, could you please type the number 3? I just would love to see how many of you are out there. Oops, gotta go all the way back. Thank you. So this presentation is geared more towards farmers, but it's also useful information for our service providers working directly with farmers. Because many of you are farmers, you're probably also aware that there are as many different ways to farm as there are farmers out there. There are some best practices and frameworks for approaching the job at hand, and finding land is not different from that. So knowing your current situation, I think it is very helpful to answer some of these questions in written format, in a document, in a place where you can constantly revisit them, reassess, and continue developing your plan, your situation. Really get honest with yourself and get comfortable being curious, asking some of these questions. Find that it's really important to ask these questions to understand what could be most supportive of your farming goals. Starting with bigger questions like these can really help to gain clarity on your situation. Knowing where you are now and where you want to be in the future allows you to create a path from one place to the next. Knowing your goals, writing them down, talking to others about them will help prepare you for successfully communicating in the ag world. Land access isn't just about land. People are involved in every stage of the process, regardless of whether you're leasing or buying. Sharing your current and future plans will lead to agreements that will help meet your needs and help those working with you understand your intentions. These next few slides, I'm going to talk a little bit about important strategies when accessing land. So the strategy you design should be specific to your goals and needs. Every farmer is going to have a different set of goals and needs. It's really important to gain clarity on your overall vision. Buying land, while complicated and very expensive, ends in a transaction that allows you to make decisions independently about how you manage and care for the land you work. You can make decisions in the moment or as land management issues arise. This is an option that might be preferred by many, but really isn't easily accessible because of the high cost of land and the amount of land available in Washington state. Leasing land is a less costly way to access land, but is not necessarily less complicated. Some of the decisions you make on leased land might be yours alone, but there will be decisions that might need to be made in collaboration with the landowner. It's really important that you have some idea about the land and the infrastructure management decisions well in advance. It's really in the farmers and landowners' favor to talk through many of those decisions as much as possible and to work the necessary ones into a lease agreement. Find a way to communicate that works for you both. I cannot stress that enough, whether it's regular meetings or written documents that you share together. Just find a way that works for you and stay in communication. So before you can move into a due diligence process, you really need to know what you need and why you need it. Here are some of the primary considerations when assessing land. Some things that we may not think about that are really important: cell phone reception, access, if there's road access, personal comfort. Are there facilities for your farmers, your farm employees? What's your community like? What is your proximity to local markets? So due diligence means the process of carefully reviewing or evaluating a piece of land. Due diligence requires a healthy investment of time and effort. Really important to do your research and not make any assumptions. Be honest with yourself about what you're an expert in and where you could benefit from service provider support. There are many service providers that are well versed in things like water rights, soil health, and it's really important to know who your personal relationships are with and who you can develop relationships with in the ag community to benefit your vision for the land. As a farmer, you need to understand what details will need to be included in a lease. What's non-negotiable for you? There's always a present disclaimer that a lease is a legal document. Find someone with training, preferably an attorney, to review your lease for you. So let's say we found some land. What comes next? We've already discussed the importance of understanding your needs. I want to dig a little further into knowing the land, learning about your infrastructure, the people, and your lease. So when we support clients, both individual farmers and collective farmers, we take a lot of time to evaluate your goals, and then the site characteristics of the land you're looking at in great detail. Here are some of the areas that we feel are really important to consider when assessing land. Another important thing to consider, what kind of infrastructure is on the land, what can be used, what can be adapted, what will require some input to get it functional, and what's absolutely essential for you. Water is probably the biggest consideration when evaluating land. So when you've identified a parcel of land, you're going to want to perform a site visit. Site visits are important because understanding that our relationship to land, especially in a lease agreement, occurs in relationship to the other people and not just the land itself. Site visits are a really important part of the due diligence process, and it's just the first of many steps in getting to know the land and the landowner. Farm to Farmer has also developed some tools for land assessment. So if you feel like that would be beneficial to you, please reach out. We have developed a land assessment rubric and some other useful lease drafts to provide you with if you are ready to lease some land of your own. A lease is a legal contract. Please get legal advice from a legal professional. Review your lease with that legal professional before you sign it. Do not recommend handshake deals. It's pretty common in the farming world where you will meet other farmers or landowners who they don't feel that a lease is necessary, but please protect yourself and your operation. Handshake deals are not recommended. Make sure you always have an actively signed lease and work hard to tend that relationship. Your relationship with your landowner is essential to the success of your business. These are just some considerations when writing a lease agreement. As you can see, there are a lot of facets to writing a lease, and many of these are probably applicable to your farm business. Here are some more considerations in signing a lease agreement. Agritourism has become a very popular method of generating income on farm, it's really important that if you plan to have an agritourism operation, to find out if the landowner is comfortable with that sort of thing, especially when it comes to U-pick style farms or any kind of overnight stay on a farm. Having visitors can get really complicated, so I would definitely ask that up front if you are considering agritourism as an enterprise. So we have a list of resources. This is just a small snapshot of some of the resources that we like to share with our farming clients. If you are curious about any of these in particular, or if there's something you're looking for, referrals to accountants, insurance agencies, those types of things, please reach out to me after the presentation. We'd be happy to get you connected to the right people. I'm going to breeze through these a little quickly so we have time for Q&A, so I won't spend too much time in this area. So these are some of our local incubators and ag parks. If you are a beginning farmer or an aspiring farmer, this can be a great place to start, in addition to some community gardens. It's important to get experience working the land, tending the land before signing a lease agreement. You really want to make sure you have a clear vision for your farm enterprise, you have a good business plan, and that you've done the work hands-on. A lot of things can change in your first couple seasons of farming. You may change your enterprise. You may decide that buying land or leasing land may not be for you. And it's just important to get your feet wet if you are an aspiring farmer. These are some of the other land linking services in Washington State. Many of you are familiar with the Farm to Farmer land linking service, but I'd highly recommend the rest of the land linking services listed here. So these are some resources that are very useful for assessing parcels of land and understanding zoning. These are just some of the tools we utilize. It's okay to reach out to a professional when it comes to doing this kind of work. And if you have questions on zoning or other due diligence things, please reach out. We'd be happy to assist you and answer your questions. These are some of the local land service providers in Washington State. Another useful technique for evaluating and finding farmland can be driving around to the areas you want to buy or lease in, looking for sale signs. Doing some landowner outreach on your own is really important as well. So if you can go to some agricultural conferences in your area, I would recommend getting to meet other farmers, talking to realtors, just really building your network can open a lot of farmland opportunities. Here are some soil specific resources. Most of your conservation districts can assist you when it comes to soil assessments. These are some water and well-related resources when evaluating land. Really important to get clarity on the water situation before signing a lease or making an offer on land. Water rights in particular are extremely complicated, and the Department of Ecology is a great resource for water rights information. We can also help you evaluate some water right information.
You're fine.
And some lease resources. I especially love the Land for Good lease toolbox. Land for Good also has a variety of resources on collective farm tenure. So please check these out. Business Impact Northwest is also wonderful for talking about leasing and lease resources. We covered a lot today. I know I moved quickly through those resources. I just wanted to leave some space for Q&A. We would love to hear from you. If you have any questions and want to get connected to myself or Libby, please reach out. We would love to talk to you about your farm goals and see how we can support you. Thank you very much. I appreciate you all being here.
Thank you, Alex. Lots of information. Yes. We will, like again, we will share all the slides, the recording, and you did mention that your staff is bilingual. We are planning on having the transcripts of this recording translated to Spanish. So that's the first time we will be doing that. So hopefully that will be without any hitch. But yeah, that's the plan to make that information also available in Spanish. And we will also have future workshops and planning to have interpretation when needed. So there are questions in the chat, but before that, Emily posted in the chat a link to the eval form for the workshop. So before anybody jumps off, please fill that out. It helps with the funding we get to organize this kind of webinars. And so one question I saw,
it looks like the first one here might be, what does an organization need to do to become a strategic partner? Okay. So to become a strategic partner, if you're interested, please just reach out. I would recommend reaching out to Naila Jimenez Cabezas, who's our director. Her information is available on our website. I know I showed that slide very briefly, so please visit the Washington Farmland Trust website. You can find all of our info there. And then we'll set up a meeting, kind of talk about how we can support each other, see if our values are aligned, and go from there. Hope that answers your question.
Another question I saw, does WFT have resources for farmers wanting to find an attorney to review an ag?
Yes, we do have resources for attorneys. We also have resources for collectives, collective specialized attorneys, attorneys who work with co-ops and co-op development. We are continuously developing our list of service providers in that department. So if you have a recommendation as well, anyone here has a recommendation for attorneys that will work with farmers in that way, we'd love to hear from you.
Is there a fee for farmers to have access to your program?
Currently, the Farm to Farmer program is free of charge. All that we ask, if you would like to be a client or use our land linking services, you can start by creating an account on the Farm to Farmer website, and then we will schedule a one-on-one introductory call with you. Depending on if you're a collective, you'll meet with me. If you are an individual, you'll likely meet with Libby or Naila. And we go from there. We learn a little bit about you, what your goals are, and then you can draft a land seeker listing and use our services from there.
Thank you. I think that's all I could see as questions in the chat, but like I said before, we have some more time for questions. So to Alex, but also to other presenters if needed. Feel free to unmute yourself, or you can raise your hand or type in the chat again, however that works best.
Since none are coming in, I'll get started. I do have a question for for Darcy and for Jess, and I'm wondering where if someone are people who are qualified for traditional financing able to get financing through AgWest or through the FSA? Because I do recall at some point hearing that maybe those programs were reserved for folks who couldn't use traditional finance.
I'll go first, I guess. Normally, we want you to go to a bank first because we want you to see if you do qualify for a bank first or AgWest or some other financing first, because we are limited on our financing. But we do want you to go there first. If you can't get financing through those sources, then you could apply through our process.
Okay, what kind of a follow-up question to that? Like, let's say, just because it's so expensive here, that like, let's say you're qualified, but it's only for, you know, $300,000, something like that, and then there's nothing that fits your needs in that price range. Does that mean you still qualify for an FSA program, or would you, do you know what does that make sense as a question? I'm just wondering like where that line is, I guess, on qualifying for other programs.
So, and that would be a resource where we could do the participation loan where the bank's willing to finance 300,000 of it. And we could, if it works, we could do if they were buying something for 600 or 800, maybe we could do the 50-50 participation loan at that point in time. So.
Okay, perfect. Thank you.
Any other questions? Yeah, I don't see any other questions. Anything the presenters would like to add? If there are no other questions, it looks like we can end a little early. All right. Well, just want to say thank you again to Darcy, Jess, Addie, and Alex for wonderful information. I know that was a lot, and some of it, you know, we had to go through it quick. So again, we will share all that information. In particular, what is it, Emily? WWFSP.org. Is that it?
Yeah, wwfsp.org. And everyone who registered for this will get an email with a link to all of this recording, all of the resources mentioned, the slide decks, and anything else will be available online. And with that link will be sent out.
Yeah, so on that website, the Western Washington Food System Partnership, you'll find a lot of information, and we will share this by email. But that's another resource you will have too. Yeah. So if no one has anything to add, thank you all. And I hope you have a great week.
Thank you.
Thank you.
Thanks, and feel free to give us a call.
There you go. I see that you are still connected. If you have a question, go ahead.
Just on ABC. I know Sarah's working on the OPPE report. Oh, I'm going to stop record. I just realized.
Yeah, today.